Hi there, traders. This is Brad Gilbert with today's trading action. All right, now if you have a look across the board here, especially down the bottom, the euro drifting back into the range a little bit. Sterling, no change in the unemployment data. It's just drifted back a touch, as has the Aussie and Kiwi, right? So it's very easy to see what's going on. A little bit of a reprieve there for the US dollar. It's just sort of bounced a little bit, and that's based off the economic data, right? And this is how fickle the market can be. But we've got the initial jobless claims, right? And this data here it's like third tier data at best. But, in the current sort of focus of unemployment or employment, it has been a bit of a focus. That was a weaker number. But the Philly Fed business index numbers, okay, closely related to manufacturing, the prior number 1.3 came out at 13.9, like really strong manufacturing numbers. And I think that's just the catalyst for people or traders to take profit leading into the weekend, right? Especially when you look at the news and you start to get, actually, let me come back to this other news page. And there's a lot of concern in the US about who's going to be running the country and whatever implications that has. It's like a minor geopolitical issue that's sort of brewing. And then you've got the other situation here as well with dollar yen, right? So dollar yen coming back. The dollar yen is the main driver of what's happening on the US dollar at the moment, right? So, and the dollar yen is a little bit higher. So there's been question marks over, is the BOJ intervening? They're talking about potentially raising rates, right? And if we have a look at the inflation numbers, there were some inflation numbers out here today. I just get my little pen. Over here, 2.6, 2.8. They're sort of on the mark, but the poll 2.7, they're sort of saying it's almost enough for the BOJ to start raising rates, which would be the first in my career. They've always been at minus 0.1. But there is, if you look at the Bank of Japan here on their interest rate probability, it's like almost a 40% chance of a hike. To me, that's enough for the BOJ to go. And then we could see the yen climb against everything else. That means that the yen cross is falling. So looking at the markets now, don't get too discouraged, right? If you look at the hourly charts alone, you can sort of get confused. You might be thinking, oh, euro's breaking down, sterling's breaking down, Aussie's breaking down, Kiwi. Okay, the dollar index is going up, dollar Swiss is back on the charge, and dollar yen higher, dollar CAD higher, right? You think the dollar's, that downtrend is over. It's not, right? This is normal behavior in these markets. The longer term charts is where the answers are. Now, daily charts, euro has drifted back to that support line or previous resistance line. There is a bit of a geopolitical sort of shadow over the euro at the moment. And the ECB, they didn't give us any clues to what they were doing, but there are rate cuts factored in, 2 before the end of the year, potentially 3 rate cuts for the US. So the US dollar is still going to go down, right? Sterling, well, it's in the framework today because we have UK retail sales, but it's going up. If anything, there's the Aussie and Kiwi are under pressure, and we're seeing a bit of discombobulated price action there on dollar CAD, dollar yen. Well, you can see it sort of broke down, tested the bottom of the cloud. It's now sitting around 157.40, but you know what? It is in the game, and the fact is, to me, for the dollar yen to break down, it really needs to break this the bottom of the cloud. And dollar Swiss is still below that previous support line, right? So things haven't changed, but this is normal trending markets. You'll get the markets coming back, testing and/or if not breaking, support trend lines for say euro, sterling, Aussie, Kiwi, and then slowly coming back. It really comes back to the data, and we need trending data to make this all work. Right. So you come into looking at where the trading action is today. It's really based around sterling retail sales figures. Okay. Now, with the unemployment figures yesterday, if I just have a look at the interest rate probabilities here, the Bank of England, right, here we go. No change, 58.9%. That's a little bit lower. Cut, 41%, right? So it's there. What we could see here, push the Bank of Canada into a cut or no change. Basically, any variance on this retail sales figure will have an impact, right? All we need is some sort of variance here. And then you can come back and have a look at so your charts and try and work out which side's the best to trade. At the moment, you'd think the downside, it's a little bit of in a bit of a dark patch there, right? There's no support just at the moment on a short-term basis. There is on a longer-term basis, it's a little bit lower. So when you come back and look at the numbers and you think, well, this is, okay, there might be something in this, okay? Just keep an eye on the pole month on month. Then you got the excluding fuel and the year on year. Okay, so keep an eye on these numbers. You know, weaker numbers, the cut's going to go up a bit, excuse me, the chance of a rate cut is going to sort of increase dramatically depending on the level of variance on the actual number. If it's stronger, well, that takes off maybe the cut at the next meeting, right? So that's what we're trading. We're trading the outcome. And when the interest rate probability is a line ball decision, right? No change, 58.9%, cut 41%. This is a good, like if you were sort of sitting there thinking, well, what am I doing? Well, I'll have a look at this. Then you can piece it together in the short-term perspective. As I showed you, there's no support. So a weaker number, right, will increase the chance for a cut. That's a weaker sterling, and you should see sterling drift down from there. Now, I still think sterling goes up, but not for, you know, it's got a good 100-odd points before it hits support, and that's where you would be sort of looking to buy for a long-term trade, right? So there's room here for a good trade on the downside in sterling today. I think that's the major sort of focus you're going to be looking at. So, and then you've got retail sales figures there out of Canada, producer prices, and then I mean, there's some commodity data there, and I think that's pretty much all we have. It is. So focus, sterling crosses, CAD crosses. Keep an eye on those probabilities. The Bank of Canada, once again, okay, a cut is pretty much a foregone conclusion, 81.4% on the 24th of July. So once again, I tell you what, if it's 81% factored in, a cut, stronger numbers in Canada would see a nice move to the top side on the Canadian dollar, right? So that's where we are. But weaker numbers really going to push that up into the 90s and confirm the cut coming from the Bank of Canada. So a small move to the downside as far as Canada is concerned. If it's a really strong number, which I can't see, then you would see the Canadian dollar rally against the other instruments, right? Trying to piece this together, I'll keep sort of talking about it. Those interest rate probabilities are a collection of all the derivatives data, but based off what the previous fundamentals were. Okay, that's why we're sort of talking about it. That gives us the framework. That allows us to see what the big players, how they're positioning themselves long-term, medium to long-term. And you can factor this in on a short-term perspective by looking at your charts and going, you know what, I know a little bit more about this than most. And at the moment, sterling has broken down here. So there's a nice chance for a trade to the downside. I think that's where the money is. And you might get a, you know, good 50, 70 points out of it, depending on how weak the numbers are. And that's all I'd be doing at this stage. I wouldn't be looking for an extended move in sterling because long-term, it's still going up. All right, guys, that's it for me. Hope you have a good weekend. For traders in our funding program, it's going to go on hold for the short term. We are very close to sort of sorting out some new details. C-Trader is the major focus for the platform. And I tell you what, a whole heap of extra instruments, like 500 instruments in total compared to what we had previously. Anyway, I'll give you more details as we go. Enjoy your weekend. Trade smart. Good luck. Cheerio.